Crypto adoption is on the rise.
Time to rise.
What used to be seen as internet funny money is now becoming an important and influential asset class, being added to corporate balance sheets and sovereign reserves. Whether it's meme coins drawing in the masses or ETFs tempting the TradFi crowd, the crypto landscape is changing in ways that are hard to ignore. Now, a recent report puts all of these bullish developments into perspective. So today, we'll be breaking down that report for you in simple terms and telling you what it all means for the crypto market. My name is Guy, and you're watching the Coin Bureau. The report we'll be summarizing today comes from crypto exchange Gemini and is titled, quote, "The Global State of Crypto." We'll leave a link to the full report in the description in case you want to check it out for yourself, but we'll be giving you all the highlights right here in this video. Now, the report is composed from the results of a survey conducted with 7,205 respondents from the US, the UK, France, Italy, Singapore, and Australia, with around 1,200 people from each. Broadly speaking, the report aims to explore aspects of crypto's adoption and is organized by age, geography, gender, and income. So, with that out of the way, let's get into it. Now, the report begins by looking at the growth of crypto ownership, which has increased in all the countries surveyed since 2024. Europe has seen the largest increase in crypto ownership, in large part thanks to regulatory efforts like the EU's Markets in Crypto Assets Bill, or MiCA. The report highlights the UK and France as the two countries with the biggest increase in crypto ownership. 21% of French citizens reported owning crypto in 2025, which is up from 18% last year. As for the dear old UK, 24% of respondents reported owning crypto in 2025, up from 18% in 2024. Fresh cups of tea all round, chaps. Notably, the UK had the largest increase in crypto ownership of any of the surveyed countries, which is kind of surprising considering that the UK hasn't really made any significant steps towards embracing the crypto industry. Well, that is, unless you count Reform UK leader Nigel Farage's announcement that he'd introduce a Bitcoin digital reserve if Reform wins the next general election, which isn't due to take place until August 2029. With a bit of luck, though, Farage's recent attendance at the Bitcoin conference in Las Vegas could spark the UK government's interest in crypto. Only time will tell. Anyhow, elsewhere, the US has a similar ownership rate to last year, moving from 21% in 2024 to 22% in 2025. Singapore apparently has the highest overall crypto ownership rate of any surveyed country at 28%, but even last year's total of 26% is higher than any other country in this survey. As for Italy and Australia, these have crypto ownership ratings of 19% and 22% respectively, although strangely there's no 2024 data for them. Okay, next, the report looks at the confidence of no-coiners in crypto following President Trump's proactive approach to the industry. The report notes some of the positive steps that Trump and his administration have taken, such as creating a strategic Bitcoin reserve, reshaping the SEC to be less hostile, supporting pro-crypto regulations in Congress, and launching the Trump meme coin. All right, maybe we could have done without the last one. In any case, Trump's policies have made a huge difference to the crypto space, and this even applies to those not involved in crypto. 23% of American no-coiners said the strategic Bitcoin reserve makes them much more confident in crypto. What's awesome is that other countries felt the same way. In the UK, 21% of people who don't own crypto now feel more confident in the asset class thanks to the US strategic Bitcoin reserve, as do 19% of Singaporeans. 17% of Australian no-coiners feel the same way, followed by 16% of Italians. Meanwhile, the French are the least convinced, with only 15% of no-coiners feeling more comfortable. And speaking of percentages, did you know that 34% of you aren't subscribed to this channel? So, fire up those like and subscribe buttons and be sure to turn on those notifications to make sure you keep up with the crypto market. Okay. The next part of the report explores crypto adoption through the lens of meme coins, which often serve as a gateway for newcomers drawn in by stories of 10, 20, or even 100x returns. While many fade away after the hype, many stick around, developing a deeper interest in the broader crypto ecosystem. Some have even gone on to join the Coin Bureau research team. Anyhow, the report notes that 94% of meme coin holders also hold other cryptos, which isn't all that surprising. What may be surprising, though, is that in the US, 31% said the first crypto they ever bought was a meme coin. This is followed by both Australia and the UK at 28%, Singapore at 23%, Italy at 22%, and France at 19%. Now, while this means that our French friends generally take the more sensible first steps into crypto, France is also home to the largest percentage of meme coin holders. 67% of French crypto investors own meme coins, followed by 59% in Singapore, 58% in Italy, 57% in the UK, 55% in the US, and 45% in Australia. Now, I'd have backed Australians to be more into degenerate gambling than les Français, but hey, life is full of surprises. What's crazy, though, is the number of true crypto degenerates that have at least half of their entire portfolio in meme coins. The US is the most degenerate in this regard, with 21% of investors having half or more of their crypto stash in memes. The UK follows with 17% of degens, while France and Singapore have 16%. The more sensible among us are the Italians at 12% and the Aussies at 11%. My worldview is undergoing some fundamental changes, I can tell you. Anyway, the report then turns to the other end of the scale, looking at the spot crypto ETFs. Now, the reason we say this is the opposite end of the scale is that, generally speaking, it's retail investors who will ape into meme coins, while the ETFs have been a powerful tool for onboarding traditional and institutional investors. So powerful, in fact, that they are the fastest growing ETFs in history. In the US, 39% are invested in a crypto ETF, a slight increase from the 37% in 2024. And the report notes that ETFs are also popular in Italy at 47%, the UK at 41%, Singapore at 40%, Australia at 38%, and France at 32%. That's pretty impressive considering that the biggest ETFs are based in the United States. The report then compares the percentage of people who bought crypto via an ETF, on an exchange, or both. 61% of respondents said they only bought crypto on an exchange, and another 25% said they bought crypto either through the exchange or through an ETF. Meanwhile, just 14% said they only invested in crypto through an ETF, but keep in mind that this will largely consist of institutional investors and TradFi whales. Hey everyone, sorry to interrupt the video, but I just want to very quickly tell you about the Coin Bureau deals page. This is the place where we put together all the amazing deals and promos that we're able to offer you guys exclusively as viewers of this channel. Head on over and you will find such things as discounts on hardware wallets, some seriously impressive trading fee discounts on some of the best exchanges, as well as some frankly mind-boggling sign-up bonuses for some of those exchanges too. The link is down below. Check it out when you have a moment. Thank me later. And now, back to the video. Now, the next section looks at Bitcoin's value proposition. The report notes that the crypto market has been remarkably resilient throughout 2025, even as tech stocks have dropped. This is significant because historically, crypto and tech stocks have been highly correlated, but more recently, this correlation has turned negative. In any case, more and more investors are beginning to see Bitcoin as less of a risk-on asset that only makes sense as an investment when interest rates are low and central banks are pumping liquidity into the market. Instead, more investors are seeing Bitcoin as a reliable store of value, able to hedge against any market environment. As the stock market struggled, crypto selling slowed down in 2024, and only 1 in 10 people on average said they sold their crypto in the last 6 months. The US did the most selling, but even then, only 15% of crypto investors sold out of their positions, which is not bad at all. Meanwhile, Australian crypto investors are the most diamond-handed, with only 8% of investors selling over the last 6 months. Notably, every surveyed country has sold less crypto in 2025 than in 2024. Next, the report turns to inflation in the US, which slowed down throughout 2024 and early 2025 after soaring the 2 years previously. The report notes that core CPI, which stands for Consumer Price Index, is the metric that investors pay very close attention to. That's because it's a measure of inflation that excludes volatile items like food and energy, providing a more stable view of underlying price trends. Notably, core CPI rose by 2.4% year-on-year in March, which lines up with the Federal Reserve's annual inflation target of 2%. However, this hasn't stopped inflation being a key issue in the minds of American crypto investors, with 39% saying they invest in crypto as a hedge against inflation, up from 32% in 2024. However, the US was the only country surveyed that showed increased concerns over inflation, as all other countries were equally concerned as they were last year. 35% of investors from the UK bought crypto to hedge against inflation, as did 41% of investors in Singapore. In both cases, this percentage is the same for 2024 and 2025 thus far. Conversely, French crypto investors seem to be feeling pretty good about inflation. Last year, 42% invested in crypto to hedge against inflation, but this number actually fell in 2025. Meanwhile, 29% of investors in Italy said inflation was their primary reason for buying crypto, as did 28% of investors from Australia, although again, there's no data for 2024, which is a bit of a shame. Okay, the next part of the report takes a look at the gender gap in crypto, which does appear to be closing. Like most other markets, crypto has always been very much male-dominated. And for perspective, back in 2018, eToro released a research survey which showed that 91.5% of investors were men, while just 8.5% were women. Thankfully, this has improved, but it's still drastically imbalanced. Specifically, 30% of crypto investors in the US are female in 2025, up from 28% in 2024. As for the UK, 33% of crypto investors there are female, an increase from 30% from last year, and from Singapore, 34% of investors are female, the highest percentile of any result, and an increase from 31% in 2024. Interestingly, the number of female investors in France fell from 35% to just 30%. Now, to be clear, what we should be striving for in the crypto industry is an evenly balanced scale. It goes without saying that this means a lot of women are sitting on the sidelines, and it would be great to get them on board. Not only would this result in a lot more money flowing into the crypto ecosystem, but some of the greatest minds in crypto also happen to be women. So, win-win. Now, let's move on to the final section, wherein the report switches from looking at gender demographics to age demographics. Now, it's common knowledge that crypto is used far more by those of younger generations, but the report reveals that this trend is perhaps even more prominent than you might think. Unsurprisingly, 90% of the boomer generation do not hold crypto. Oh, and for anyone wondering, boomers are typically defined as those born between 1946 and 1964. Anyway, things are a little more positive when it comes to Generation X investors, as in those born between 1965 and 1971. 74% of them say they don't hold crypto, while 18% said they do, and another 8% said they have held crypto in the past. But it's the millennials, those born between 1980 and 1994, that have the highest levels of crypto adoption. Only 48% said they don't hold crypto. So obviously, this means that more than half of millennials have adopted crypto assets, which is awesome news. Specifically, 36% reported that they actively hold crypto, while a further 16% said they have done so in the past. But what's by far the most exciting statistic is Gen Z, that is, those born between 1995 and 2012. That's because only 52% said they don't hold crypto, while 29% said they're currently crypto holders, and 19% said they have held crypto in the past. Now, obviously, the reason why this is the most exciting is simply because of how old many of these investors are. Those born from 2012 onwards are too young to be expected to hold crypto. But even with a good chunk of this generation still in school, crypto adoption is still very close to 50%. Naturally then, this percentage will likely increase over time, bringing countless more investors to the space. And this trend also suggests that future generations, such as Generation Alpha and beyond, will be even more receptive to adopting crypto assets into their everyday lives. Heck, your own kids or grandkids could be born into using cryptocurrencies, with the question of crypto adoption being a thing of the past. That is an incredibly prosperous future that we should all look forward to. And that just about brings us to the end of this report, and I'll remind you that you can find a link to the full thing down in the description below. Just be aware, though, that the report was actually surprisingly short, especially considering that it was published by Gemini, a major crypto exchange that presumably has access to a much broader range of data points. In any case, what is clear from this report is that crypto adoption is on the rise. Perhaps the most telling sign of this is that even when macro conditions have been uncertain, this hasn't deterred people from investing in Bitcoin and, to a lesser extent, the broader crypto ecosystem. The reasons for this have less to do with the macro environment itself, though, and more to do with the impressive regulatory efforts of the Trump administration. The biggest standout here has to be the SEC, which until recently was a massive thorn in the side of crypto firms and investors everywhere. Today, though, the SEC is taking drastic measures to do a complete 180, moving away from its previous regulation by enforcement approach taken under Gary Gensler's reign. The focus of the SEC now is to provide the very regulatory certainty that Gensler refused to give out, which will allow crypto innovation to thrive. And to give an idea of how different the current SEC is, Hester Peirce, a current SEC commissioner, even attended the recent Bitcoin 2025 conference in Las Vegas, where she clarified that, in her view, the majority of crypto assets are not securities. Oh, and by the way, if you're wondering what else was covered at this year's Bitcoin conference, then good news, we recently covered the highlights for all 3 days of the event, which you can check out right over here. But pro-crypto regulations are just one side of the story. The fact that the US also has its own strategic Bitcoin reserve and has declared that it won't sell its roughly 200,000 strong stash of BTC has inspired other countries to follow in its footsteps. If you watched that Bitcoin conference roundup I just mentioned, you'll know that the government of Pakistan recently announced a strategic Bitcoin reserve of its own. And on top of this, more companies, both publicly listed and private, are adding BTC to their balance sheets. And that's simply because BTC is providing much better returns than the traditional approach of storing funds in US treasuries. In fact, there's even a growing number of companies becoming pure-play Bitcoin treasury vehicles, following in the playbook of Michael Saylor's strategy. And likewise, the spot crypto ETFs in the US have been huge for crypto adoption. And what's even more exciting is that there are a number of spot ETFs in the works for a range of altcoins too. This will likely bring in a broad range of investors to the altcoin market, which could be rocket fuel for those who've watched their altcoin bags underperform. Well, so long as those ETFs gain traction much faster than the spot Ethereum ETFs did anyway. If not, then all we can do is pray for the next bullish catalyst to come along to take our portfolios to the moon. Okay, if you found today's video useful, then show those like and subscribe buttons a bit of love. And if you want to learn more about the pro-crypto stance of the SEC, then check out the video right over here. And if you want to learn more about 6 of the biggest risks to Bitcoin's rally in 2025, then the video here is your huckleberry. Thank you all so much for watching, and I'll see you again soon. This is Guy, over and out.